Hi, my name is Amy. Thank you very much for watching, and let's make some bad financial decisions together. This is for entertainment purposes only, so if you're entertained, please like and subscribe. I would really appreciate that. And no, there was no better picture of me with Jay. I probably should have taken a selfie with him at some point. But yeah, this is my first interview, and here it is. Yeah, with my dogs.
What kind of dogs do you have?
In the house, 4 Great Pyrenees mixes.
Oh, love that.
So they're like 100 pounds each.
Yeah,
So.
I have a burner. I've had Akitas and I've had burners. I like the Bernie Smack dog. Such a great temperament. Oh, just lovers.
Yeah.
Just lovers.
Yeah. So first of all, it's really nice to meet you.
Yes, you too. Thanks so much for coming. This is so great.
It was like when I got invited, I was like, I'm a faceless channel, right? so I was like, well, I guess I'm doing.
Was it the first time on camera for you?
I revealed myself yesterday on my channel.
That's awesome.
So
That's
I was
great.
like, well, am I gonna have a choice? I'm going to be on the NASDAQ floor.
Someone's gonna see me.
Yeah. So sure, but thank you for forcing the issue, I guess. Okay. The most burning question for me. I watched an interview a while ago. It was with Max Convexity, and you were joking about Salty.
Mm-hmm.
Do you remember that?
Oh yeah.
Would it? Because I've been thinking about it, because Ulti's been doing really well.
Yeah, so for those that don't know, Salty is the inverse odd idea on Ulti, right?
Yeah.
So if I bearish stocks.
Yeah, so what if it's not exactly just an inverse of Ulti, but just stocks that should be shorted?
Yes. So that's the choice. Is it, hey, are you just going to get short the ones you're long in Ulti, or are you going to actually select tickers that have more of a propensity to go down versus up? So look, as a portfolio manager, I think we should try to find the stocks that are going to go down, not just do the opposite of Ulti, right?
Yeah, like an intelligent down.
Crash, go, right? It's okay. We want stuff that's going to go down.
Because I always thought Ulti was a really good experiment. It's just like...
That's a good way to put it.
Because it's just like, you give us money, and we'll find the things with the highest IB, and we'll make our plays, and we'll try to make you the most money. It's Ulti in the ultimate amount that we can get.
That's what we try to do.
Yeah, and I think, at least from my perspective over time, it turns out that you actually have to be in good underlines. And so it's not like, because I know that the prospectus says like, it's secondary for the price appreciation, but people just really appreciate not like putting it for $20 and it being $5.
Well, that's why so I 100% agree. The first version of that prospectus was, we're just going to be long stocks, some level of diversification, and we're going to sell calls for income where we're buying the highest level IB. And then we got our face ripped off on 2 or 3 trades where the underlying dropped 50% in a day, and you're like, I just killed the whole month, right? So we added in that level of protection. So now we're managing the risk along with, and we gave up a little income because I think our yield was like 100, 120% out of the gate, and now we're in like the 80s. We think that protection is worth it. RH 2 weeks ago got crushed after earnings. We were long puts, we were protected, it was great.
Yeah, because the question really is like, what is the ultimate amount that you could get from cover call stocks? And I think Ulti really does answer that question of like, well, yeah, you can get 100%, but like you're gonna get wrecked at some point.
Yeah, and realize you want to have some upside. Like part of the outperformance of Ulti, like let's call it the last 2 months, has been that upside capture plus the income. You can sell right at the money, limit all the upside, and probably make 200+%. But like that's it. All you have left is downside, right? At that. So we want some upside capture. It's a very interesting pairing.
Yeah, because I was a fan for Ulti for a really long time, and I never talk about it because we haven't actually seen it with the new prospectus with a down market. So I mean, Ulti's never going to be like.
I think you could look at April because we were already using the puts in the nonsense that happened with the tariff stuff. So you could look a little there, but you're at an elongated down market like 2022.
Yeah.
Yep, we haven't seen that yet.
Yeah, so I'm just really curious because I do like the basket ones. Like I feel like as a retail investor, that's probably not doing the most to do my research. Having a basket of stocks is like okay, like. I don't think I'm putting that really well, but
no, I know what you mean. So there is this function of the basket that has an implied level of protection and lower volatility because of diversification, right? Like that's implied in the idea of a basket versus one, right? Hey, we could do Chippy with just NVIDIA. How's that going to do? I don't know. It's just NVIDIA at this point, right? So, I think so. I think it's a little more of an institutional, professional build than all my money's a Misty. Like, but that's why we have these different flavors.
Yes.
It's a different appeal.
Yeah, it's been my opinion that, I mean, Ulti is an experiment, but I've noticed that you put funds into Ulti first, and then as their success and everything, that we get the single stocks afterwards.
Sometimes, for sure, like it's just because we like a stock because it's got volatility. We know it'll be an interesting single stock. But maybe it's just not ready yet, right? Or maybe it wasn't on our list, but we know we love doing it in the smaller groups.
So what's the next thing coming up for YieldMax? Because like I would really love more basket stocks, honestly.
Look, I think you could watch our filings. I think the next few are going to be single stocks. A few more. I think we announced DraftKings the other day. I think we'll just see more and more where the market takes us, and we'll go where there's adopted. But there are other baskets that have been filed, right? I'll tell you, I've been a little disappointed with Renty, which is actually a pretty darn cool build. Nobody seems to like that right now, but at some point, people like real estate again.
So it's my opinion that get into these funds while they're not doing so hot, because in the long run, like, it should do well. And being properly diversified into things, like, eventually it'll do well.
Well, I mean, that's investing in general, right? Like, it's not timing the market, it's time in the market. I didn't make that up, but I like using it. So buying a dip is a real mentality. We have seen that now for years. 2022 wasn't so great doing it, but since then, it's been like the bounce we just saw here is one of the most significant ones I've ever seen in my 28 years of trading. So you got to watch those. You got to be prepared for those. So look, I don't know which ones are always going to do well. You know, the underlyings are always kind of, that's the basis, but that's really, I think it's always the important thing. Like you said, it helps when they go up. Yes, it helps when you go up with a cover call strategy. Up is good. Up is good.
So you've been doing these interviews for a while now. What is one of the more interesting opinions you've come across?
I just think people are evolving along with us, right? And just paying attention to market functions, all of those kinds of things.
What's your favorite financial philanthropic song?
Oh my God. I love the Oops, I Bought Coney Again. I love that one. I love that one.
Yes, this was the top of my mind, the most urgent thing I needed to talk to Jay about. Where is SLTY? And I'm not saying this just because I am wary of Ulti. I'm saying this because, in my opinion, it is a good thing to short stocks that you're in when, for a hedge, but I don't think that shorting stocks are for long-term plays. So if we had a fund like SLTY where the fund managers can just get in and out of positions when they feel like we've made the most amount of profit and they make their best judgment calls, I think that would be like really cool, and I would really love to experiment with that as a true hedge in my portfolio. So I don't believe that we want literally an inverse of Ulti. I would love to have stocks that we believe are going to go down in the short term and should be shorted. Or, for example, NVIDIA is having their earnings call. We'll have a small position of that bet of people are going to freak out because NVIDIA had a good earnings call, because that's happened before. Or, Tesla's doing what Tesla does and it's having a sudden crash, and you can get in and you get out. And I'm just curious because there is a skill that you need for doing short stocks, like shorting stocks, because if you are in them for too long and then the stock goes up again, which stocks tend to want to go up and to the right, then you can also get your face ripped off, as Jay says. So I would be more interested in investing in Ulti if we also had an SLTY. So hopefully it's a weekly pair. Hopefully they actually come out with it. And Jay did say that he was going to take this request seriously. And, well, today Financial Philharmonics is Damn. That was amazing. And it's just a country song about how amazing the NASDAQ experience was and how tired I currently am. But on Reddit, we have this SLTY version of Ulti is being filed by YieldMax post. And Jay was actually talking with Wolf Trading today, apparently, and he brought up SLTY. And by the way, I'm Miss Dash Roundhill on Reddit. But, like, I just think that if we could get this so that it's stocks that should be shorted in a short amount of time and they're actively managed and they have the correct like risk mitigation and everything, that this could be good. Also, the entire comment section of this was like, so slutty. Because it doesn't have any vowels in it, so how are we supposed to know it's salty or sultry? Either way, I'm excited for it. And I just think that a lot of us don't have properly hedged portfolios. Like, I definitely don't. I have a soft hedge with GLDY, but it could be interesting to attempt to hedge your portfolio with something like SLTY. And I think that this would be superior to the existing inverse funds that YieldMax has, because like I don't want to short MSTR for the long run, but at some point MSTR is going to have a dramatic downward turn. So if I was in something like SLTY and they did their plays for, the week or two that it's doing badly and I get a bunch of money, then I'm not going to complain. So I think that SLTY has really great potential for doing pretty well in people's portfolios. Also, yes, Ulti has some protections in it, and I'm going to look back at April and just make sure that, because I was invested in Ulti in April, I believe. And my biggest complaint with Ulti is just that it does not recover very quickly. So when there is a slight downturn, it just takes forever to recover. And then, you get a real big dip and then it like just doesn't recover quickly. But it's not supposed to recover quickly. It's just supposed to give you maximum yield. So I still think that Ulti is a really cool experiment, just not one that I need to, at this exact moment, have a large position in. So for YieldMite, I still have to update it with today's dividends or distributions, because the automatic parser went through, but it only parsed some of the YieldMax funds, so I have to go back through and figure out why it didn't recognize some of the symbols. So anyways, let me know what you think. Are you excited for SLTY? And I'll talk to you later. Bye.